All right, are we live? Let's make sure we got noise. How are you guys doing tonight? I'm Justin. It's the Ivy League live stream. Thank you guys for joining me. Let me make sure we have some sound real quick. If you're new here, just so you know, we got some volatility coming. All right, there's a lot that I'm going to go over. If this game, I have the Giants and Dallas game on right now. If it's too loud, you guys just let me know. Right now it's Dallas 9-0. Actually, I haven't even really been watching it, but I didn't expect to see that. It doesn't surprise me, but I figured a divisional game like that, it was. I just didn't hear them say touchdown or anything, so I don't know if that's all field goals or what. But anyway, let me see if I have sound. If you could take the time right now to like, share, and subscribe. Share this video with a friend. I'd like to be able to try and get to like 25 likes. One of these, if we can get to like 25, if we even get to 50, if we get to 50 likes and 25, 50 subscribers, I'm going to do something nice for you guys, right? Whether it's money, cash, whatever. I'd like to do something nice for you guys. We have a huge week. I want to get us all prepared. I want to start off with a couple thoughts. Let me make sure I have sound. I just had my screen up. We are good. We're good. If you guys have questions, thoughts, tickers, there's another Dallas touchdown. If you guys have thoughts, tickers, all that fun stuff, let me actually size this all up and get us going. I don't know why the chat's not in here. Not sure let me get this. So again, if my camera shouldn't, my camera should not freeze up on us because I went and I made sure of it, right? I restarted everything before I started the stream because I'm tired of it freezing on us. So I wanted to avoid that. You're going to get some education tonight. We're going to get into a little bit of banking that's going on, which is like I'm still, I watched football all weekend, so I'm still in the process. I'm like, is this a good thing or is this a bad thing? Overall, it's a bad thing, right? It's not good if the Fed has to do this. There was a G20 meeting. I'm going to cover. I'm going to cover a lot of things, right? And then we're going to get into the data and where do I think if this then that, right? If the data comes in this way, where does the SPY go? What do I expect tomorrow, Tuesday, Wednesday, Thursday, Friday? You have China and India data as well, right? But more so, the data that we have. It's not even recession. It's not recession. It's not necessarily inflation data, but it is. But there's more to retail sales that I'll jump into real quick. That is a gauge for a recession. That is the second half of the equation that's used to, technically quote unquote, are we or are we not in a recession, right? Along with non-farm payrolls and industrial production, something of that nature. I'd have to bring it up. But I could have swore we had retail sales. I know I did not see it. I haven't even looked at it yet. It's been a busy weekend for me. I hope you guys had a great weekend. Football's back. It makes the wintertime tolerable. Not that we've had a bad wintertime, but it makes it tolerable. And I hope you guys had a great weekend. I did. I had a really good weekend. I had a nice profitable weekend. I wanted to take the Browns today, but I had put in San Francisco and Indianapolis Colts, but that Colts, I was like, I was trying to I more so was siding with the Browns, and I was kind of in a hurry because I was in line at the casino that, in my state, that's where we have to go and stuff. And I was like, man, I'd rather just take Cleveland, right? I felt really good about that game. And so there we go. Retail sales Tuesday or Thursday, really? Retail sales on Thursday. All right. So I had a great weekend. Right now, 4-1 on the year. That is with NFL and college. So I didn't want to go over my skis while having 3 tickets out on the first game, guys. Manage your risk. So I don't necessarily just bet to bet. If I was a millionaire, maybe. But even then, I don't see what the sense is in that. Because I actually like to make money at this. Every year I do the same thing. I start with X amount of dollars and I turn it into something more. And by Christmas time, I have money for Christmas. I have I've done it every year since 2017. Got the receipts to prove it. Just like Deion Sanders, I've got the receipts as well. I kept my receipts. So yeah, so we're going to get into that. Guys, this is a huge week. We're going to get into some education. Let me not repeat myself over and over and over. If you could, hit that like button, subscribe if you haven't already done so. You guys are going to like it, like what I got in store for us tonight. If you guys have questions or comments, please throw them in the chat. Any tickers, throw them in the chat. I need to know where in the heck the chat is. There we go. All right, there we go. There we go. So, thank you all for joining us. It may be we may not have that many viewers because of football being on, and that's all right. So, yes. All right, call. We're good. All right, so. All right, first things first. First things first. I'm going to get into the data, but I want to show you guys a couple charts. All right, these are some charts that I brought up. And what's up, Ray? What's up, NASCAR? How you guys doing, man? What we got for next week? This is China IPO set to debut early next week. Yeah, there's also, I was actually looking at another IPO that, what was it called? It's like a grocery store one. See, they actually, one of their warehouses is not too far from me. Shoot. But yeah, we do have China data and India data. Let me see here. But there is an IPO. There was some news on an IPO. Instacart, that's what it was. Instacart is aiming for a valuation of 8.6 to 9.3 billion. I'd have to look into the financials for that one. That seems to be a little bit, for me, that seems to be a little bit high. Right? I don't know how long they've been in business, but I didn't start hearing about this company until maybe a year, maybe 2 years ago. Right? So if they've grown to that, that type of valuation, again, I know it's forward earning valuation, a premium being put out there for forward growth, but not right now, not in this environment. So let's go into the data. We'll do that. We'll get into the China. We'll go into the data. And I want to talk about Meta. There's a couple other things, and I see Ray put it in here. Meta, Tesla, AMD. We'll cover them. Meta had some really weird price action, and I was a little upset Friday. I wasn't upset, but when we get into these charts, whatever it was that I was looking at Friday, Tesla, right? Was it Tesla that we shorted on Friday? I would have been gravy trained to hold this thing the whole day. It was. We top tick this thing, guys. If you don't know, we trade right here live Monday through Friday. 7:30, 7 o'clock till 4. If there's earnings, we'll stay after the close. We literally got in on these tails. When I brought this up before we got into it, so it's not like, oh, I'm in a trade. No, I was already, I put out my watch list. I tell you where I'm buying, where I'm selling, where I'm shorting, and where I'm buying back, whatever. So we got this. This was a really nice trade. I just took my profits here. I had a nice, I think it was like 12%. I had a piece off at 10%, and then got that extension with 12%. So I took it off here, and obviously you had a decent, you still had a decent move down. I mean, you're talking, we got in up here, guys, at these wicks at 256. And you could have even taken it to, you could have got at least, I don't know, $5 to $6, $7, worth out of it. But, if you're playing options, that time decay, that theta's eaten up. And it would have been hard for you to hold this if you're playing weekly options to sit through this chop here. Yes, it's going down, but these pops are going to kill you depending on where you buy it. So this is what I was afraid of, this right here. from 10:30 to 11:30. That's why when I get my, especially because the day prior I had a small loss. So that small loss is no more now, and it put me on the green. So therefore, I was done. There wasn't much going on, but that was Friday's trade. I didn't make a video Friday or this weekend because of college football and the NFL. And if you don't know, and if you do watch sports, I do have a newsletter I'm working on, and I'm going to be getting that out. It's gonna have statistics, but it's gonna have more so daily. Or I'm gonna have it dive into different stats, not just for the team, but more so. What would you call it? Like let's just say the loser for Super Bowl hasn't covered. I'm just making up a an example that's probably not true, but let's say the first game, or let's say the Super Bowl loser hasn't covered the spread in 18 of the past 5 games when being favored, right? Things like that, right? I use that along with how I come up with the score. The newsletter is going to cover, I'm going to give you every single score, what I come up with for the score for each game. This week was a really good week in college football, and I didn't make a single play on Saturday. I didn't make a single play because it's the second week, first week. But this week, it gave me my confidence that I'm reading things right. So it's a little hard for me to start, doing things early on. I need a little bit of numbers. I need to watch and kind of see what's going on. You don't want to rush that stuff, especially if you do it the right way. You're not just here to gamble, and you're actually here to beat the bookie, right? Make yourself some money. You can pick your spots. There's certain places where you can just pick your spots and make your money. You're not going to win every single one. That's why money management is key. But if you can win more than you lose, then you're going to be doing just fine. If you can at least hit a 65, 55%, you'll be doing all right? I think last year college football was like 22 and 5, maybe 22 and 6, something like that last year. There were a lot of games I stayed away from too, and that's also that actually worked out. There were a lot of games that I played last year that worked out, and it is what it is. I still had a great year. I'm telling you, great year. All right, let's do it. So we're going to start with the data. But yes, that newsletter, I'll post that on Twitter. If you don't know, follow me at Ivy League Trades, Ivy League Trading, Twitter.com. And we do trade here live Monday through Friday. So let's get this video going so we can get into it. I think Monday will be a sideways day, right? You're not going to get, when you have such data coming out, right now, let me explain this to you. And a lot of you may know this, Fed's raising rates because of inflation. So therefore, the market is going to want to know what is inflation. What is the inflation data? Is it getting better? Is it getting worse? Is it staying the same? So that we can kind of see, this is what the CPI, which is Consumer Price Index, what the inflation data is, so we can kind of see what the Fed's going to do. There was already talks this weekend. There was news out that they talked about stopping and pausing, pretty much just pausing and giving the rate hikes a break for a little bit, letting some data come in and letting that lag effect, catch up before they, do too much. And I felt like we were getting there in the first place. I already thought we were getting there. I didn't expect another rate hike. It made sense when Powell said 2 meetings ago, we went from 75 to 50, from 50 to 25. Now, how do we go from 25 to 0? Well, you take a break, right? You went from 50 to 25. From 25, take a break, 25, and then maybe that's it, right? Unless something changes, right? You have maximum employment, price stability. That's their 2 mandates. Maximum employment, which we have. We're at an all-time record. And yes, the Fed does want to loosen the labor market up. It's too hot right now. It's having an adverse effect on what it is they're trying to do. Maximum employment, which we have, price stability, which, if you ask me, we don't have price stability, but in sense we do. Prices just went up and they've just sat there, right? Price stability is week to week. What is milk, right? This month milk, or this week milk is $3, and then you go to buy milk next week and you buy it at $5.85 or $6 double, and you just went and bought milk on the high. You're holding the bag on milk. That's what they don't want. They don't want volatility in, you know, in food and things like that. Your necessities. They don't want volatility. Like, you know, you can have volatility in the markets, but you don't want volatility on clothes. Like, you know, I don't think a lot of people really pay attention to that kind of stuff. That's something that could happen, right? You could have eggs and milk and prices just bouncing all over the place, but that's ultimately what the Fed's for, so that prices don't just up and down, right? Price stability. And I actually had a conversation with some people a while back. They don't understand that could have been a thing. It could be a thing, right? I mean, ultimately, it's only a thing if something's happening, right? If not to say it's the end of the world, or if there's a major war, or just something going on that causes a supply issue, right? And the demand is there, and could prices going all over the place. So anyway, let me not get sidetracked. So that's Monday. I don't expect us to really do anything until Wednesday. But so Wednesday is CPI, core inflation rate, month over month, year over year, et cetera, et cetera. We also do have some oil data as we always do. So what I want to see, which I'm going to continue to go through the data, but I want you guys to understand that tomorrow, unless there is news, you just had a G20 meeting this weekend. I haven't really looked at the news to see whether there was anything big or not. I know there was something with Biden saying that he doesn't want to hurt China or do anything like that. And I get it. He wants fairness, you know. He wants fairness. They want clarity. As they should, right? As they should. I mean, you don't have to vote for him or like him or anything to say, yeah, you know, that's what should be had. And again, excuse me, because I watched a lot of college ball this weekend and I didn't shave. It will be coming. A haircut and a shave will be coming. I was just too excited about football this week. So, don't mind me. I apologize. I want to see how positioning goes in Tuesday. I want to see how the S&Ps and the market moves on Tuesday. So Monday, if we get some separate news from companies, right? Let's just say Roku comes out and says this and that. Starbucks. There's news with Starbucks. Just something random that'll set aside that particular company from the market. Maybe that's where we look to play, right? Maybe that's where we look to play, right? Maybe you scalp the SPY. Maybe you scalp some mega tech, right? NVIDIA, Tesla, Meta and stuff. But I don't think things pick up until Wednesday into Thursday and then possibly into Friday. But I think Wednesday and Thursday, specifically Thursday, is going to be the day where we get a big move. Now, if we get a surprise on Tuesday with, we don't have really anything on Tuesday, but, we do have. Let me make sure I go through. So we have Redbook, but that's not gonna matter. Not when you have CPI and whatnot coming up. I think CPI is going to come in a bit high. So Thursday you also have PPI as well. You have retail sales. All right. You have an ECB conference, European Central Bank. You have jobless claims, right? Jobless claims, retail sales. Retail sales is specifically your recessionary data. That is the second part to 2 consecutive quarters of GDP that is negative. 2 negative quarters of GDP is technically a recession, but if you have that, but things are good and the employment's good, the employment market's good like it is now, then you will look at non-farm payrolls, retail sales, and manufacturing. Those are the other 3 that nobody talks about. We talked about it on this stream. We do a lot of educational stuff that I'm getting ready to get into. So I want to see how positioning goes into how it goes into Wednesday if we think CPI is going to be higher than expected. Right? If the market, or I'm going to say institutional players, the smart money, does their research and has information that we may not have, that tells them we think we're going to get a higher than normal number, if they don't try to cook the books, whatever. I'm just saying, right? Let's see if they start positioning for it on Tuesday. Let's see if they start de-risking maybe end of day Monday coming into Tuesday, or do we get a bounce, right? I don't think we're going to get a bounce going into CPI. There's too much risk there. If we get a bounce into CPI, I'm shorting it at the end of the day. That's definitely going to get sold off. I can't say definitely. Let me backtrack and not say that. If you guys could, hit that like button, subscribe if you haven't already done so. It's getting good. I'm telling you, I got a lot of stuff I'm going to show you here. So let's watch Tuesday, how positioning goes. How do the Qs, or watch the Qs, watch the Dow, watch the IWM, and you can watch a SPY, but you're watching the SPY if you're watching the Qs. You know what I mean? See if you see divergence. See if you see a rotation going into Wednesday, which would be on Tuesday. All right, so that's one thing I'm looking at. Retail sales. That's why I'm saying Thursday could be the day. Let's say CPI comes in line. Thursday, we're going to move. If we don't we're going to get some volatility Wednesday, but we may get the continuation of the move on Thursday. And I'm going to chart out my thoughts. So retail sales, or not retail sales, but CPI is coming in at 0.2% month over month, guys. We're going to want to watch that. Year over year is 3.2. You just got PCE. It was for last month, for July. So the Fed looks at CPI. They don't gauge it, right? They don't use that to say, hey, this is what we want to do. This is not their decision maker. They use PCE, which you've probably heard over and over and over. Jobless claims. We want to see jobless claims going up. Right? We want to see them going up. Last week, they went down. They went down last week. Consensus is 226,000. Forecasted 221. Previously, 216,000. Initial jobless claims. Now, the thing is like, there's a difference between getting fired and not filing for unemployment. I take it initial jobless claims is claiming your benefits for unemployment, right? So, there could be a little bit of, you have to dissect it. Maybe I'll go into that when we get there, and we'll dissect it as it comes out. We'll go to where we need to go to and dissect that number. But it's going to be an important number that I think will be probably more important than PPI, unless PPI comes in way above or way under, right? If you get an increased CPI that's well over, and let's say, like we just said, the forecast is 0.2% month over month. If it comes in 0.5, 0.0, or 0.4, that's well over. That's a big jump. You're going to sell off, I promise. We're going to have a sell-off. That means that rates are going to be higher for longer. And then there's also the risk that, higher for longer is going to land us in the hard landing bucket, not the soft landing bucket, right? We've been throwing quarters in mostly, we've been throwing quarters all over the place. Soft landing bucket, hard landing bucket. If you've been here with us and joined us before, that's soft landing, that's hard landing. We've done it as the data came out. Jobless claims we're going to want to watch. China, industrial production. So I've already wrote this down, which is something I wanted to talk about that I'm getting ready to get into when I show you guys these charts, and then we're going to go into the actual charts. Global trade is slowing. All right, this is not good for China. It's not good for us. I mean, listen, the entire world is raising rates. It's only a matter of time. It's only a matter of time. I had a discussion over the weekend on Twitter. It wasn't a discussion, we kind of commented back and forth. But if you guys don't know, we have done it. I've done it quite a few times on here where I've brought it, I've brought it to you guys to show you guys. Look, at the very end of the last rate hike cycle, right? The very last rate hike, it was 12 months, damn near to a T, give or take, right? When you saw unemployment start to really tick up, it went down, and then it just kind of bellied a little bit, and then really started to shoot up, right? You also have on the other side of that an average of 2 years, 24 months from when the rate hike cycle starts. The first rate hike given in a rate hike cycle, it is normally 2 years. So we're getting ready to come up on that time. I think we're 19 months, something like that, 19, 20 months, right? So we should start to see that data coming in by the end of the year, first quarter of next year, maybe the beginning of the second quarter of next year. Maybe sooner, maybe longer. Because again, the government still has, I don't know, I haven't looked, but we still have data, not data, but money that the government is allowed to spend. You also have, what else do we have? We have the government shutdown possibly looming, right? They got it, they extended it. Now they got to work on this stuff. That's also going to be coming. So that's another wrench in the hard landing bucket, right? Is there more talks of not getting something done? They did it last time. And again, they used it. I want to remind you guys, when they do this stuff, they use the cameras while they have them for free. That is free access for them to get to you and everyone else. By them getting in front of the camera. That is like free advertisement. Hey, look what I'm doing, right? A lot of people don't think about it that way, and that's why they do what they do and they prolong it, because that's just that gives them the camera for free. If there's nothing going on, you don't see them. They can't get across to voters if they say, "Yup, we decided on a deal. The deal's done." You don't see them anymore, because people don't tune in to C-SPAN. People don't, some people don't. Don't get me wrong, some people do, but the majority of families do not. Majority of people do not just turn on C-SPAN and stuff like that. They have better things to do with their life. So the longer they can not come to an agreement until that date, that's just free. That's free TV time, guys. So think about that. They're going to say this. They're going to say that. They're going to go back and forth. Let's just see how that plays out. So industrial production, year over year. And then we come in to Friday. You have Michigan consumer sentiment. All right. You have Michigan consumer sentiment on Friday. And we have industrial production. Again, this was the other one I told you guys for recessionary data. Industrial production. That's the third one. Right. Other than GDP, you have retail sales, non-farm payroll, industrial production. Right. That's the other side of the equation for a recession. All right. India. There was, I just said there was India. There's China. Where's the old India? India should be. I know that there was. I thought. Hold on, because I could have swore. Oh, inflation data. Well, we have manufacturing, industrial production, inflation rate, year over year, month over month. And I'm pretty sure that was it. Food inflation, food index, fuel year over year. So China, industrial production's big. They're trying to get their economy going. Again, last week China did a lot of stuff to get their, here you go, also balance of trade, exports and imports. So it's a big week for them too. Right? China, India, us, Europe, right? Inflation rate year over year for Europe as well. I think the individual I spoke with, kind of commented back and forth was with the way I think she's from Europe. So, and then Canada, right? So we're getting inflation data from around the world, guys. So a couple of things I want to get into. Now, it's all on how you want to look at it, right? It's all on how you want to look at it. So what we have here is a chart from Sentiment Trader, institutional trader, not speculative options premium, in net speculative option premium in the billions. Last week's panic hedging was 3 times more extreme than 2008. That's put buying. I don't know what happened to my phone. Now I got to go back because I had what I wanted to get into, what I wanted to get in with you guys. All right, so it's all good. It's whatever. I can go right to it. All right, so here we go. So keep an eye on this, because if something happens and CPI comes in decent, you're going to see put selling, and you're going to see a gamma squeeze like you haven't seen in quite a while, right? this kind of stuff is important. I mean, it gives you kind of the underlining positioning that you know if you get X, you're going to get Y. All right, let's go to the next one. Come on. What? Come on. I guess I got to click now. Housing affordability for first-time home buyers, team. All-time low since 1986. This is an all-time low. Housing affordability to first-time home buyers. It's bad. That's in the hard bucket, or hard landing bucket. Here we have GDP, or not GDP, but non-farm productivity. All right. So what this is showing you is productivity. Why is my phone freezing? Because I have something on here I want to read and show you guys. I'm going to get into it next. We have data. This is from JP Morgan, by the way. I got this off Tom Lee's Twitter. You can find him at Tom Lee, not Tommy Lee, at Twitter. So just Google Tom Lee and it'll be up there from Fundstrat. So productivity's picking up. We have data on hours worked for the first 2 months of the third quarter. So if we are right about our GDP forecast, it looks like productivity growth will be stronger, or will be strong that quarter. Likely in the 3% range annualized. This would follow a 3.5% SAAR gain reported for 2Q, which was revised down from an even stronger earlier estimate from the BLS. Even 2 quarters does not make a trend for productivity data, which can be very noisy, but it does appear that the trend in productivity growth has picked up lately. Figure 3, which is this. Productivity rose 1.3% OYA as of Q2. A clear turnaround from a negative 2.5% OYA reading for second quarter of 2022. 2Q 2022, and we think it could pick up about 1.8% as of the third quarter. So, I have already shown you guys. This is not surprising. You should not be surprised about this. I don't know why they are. You know, we should be starting to come into a time where this actually does get lower, which would be a lower high, in my opinion, here on this chart, right? I would expect this to start making a lower high. Because if you don't know, I have brought this up, and if this is your first time here, guys, like this stream, subscribe if you haven't already done so. I beg you, because we're going to give you guys trade ideas. We don't sit you guys through a sales pitch. We're here to give you the facts, trade ideas, and help you guys make money at the end of the day. This is why I do it, right? We manage risk first. We catch up or downside second, right? And we do not count our chickens before they hatch. So I want to get this to you guys. I know you guys are seeing my photos. I really don't care. I hope I didn't delete it. I hope I did not. Oh, just my little baby girl. I may have. Did I delete it? No, right here, guys. Right? I've shown you guys this many times. Right? You're going from quantitative easing to quantitative tightening. Okay, when you go from quantitative easing, which is this first box here, middle box is during the cycle, 2 years after. This is GDP growth during rate hike cycles. Okay? And what happens is in the middle of rate hike cycles, or during that time, GDP gets raised. That's why when the Atlanta Fed raised it to 5-something%, it's not surprising. Because that flow of liquidity is still coming through, and you're witnessing the lag effect. I mean, look at it. June 1999 to May 2000. You could actually look at this box backwards, honestly. Because what you have is, and what you're probably not seeing is, 2 years prior, 5.3. During rate hike cycle, 6.1. 2 years after the rate hike cycle, 2.1. That 2.1 is why you flip back to quantitative easing and the process starts all over again, right? It's just a big wheel. Quantitative easing, quantitative tightening. You tighten, things get bad, they slow down. We ease to pick things back up, only to bring it back down, to bring it back up, right? That. We're just going up, over, up, over, up, down, up, down. We're just doing it in steps. Buying time. Buying time, not just boom. Right? We're not Bitcoin in this stuff. So at least the Fed's not. So this pickup in productivity is likely helped limit underlying inflation pressures and growth in unit labor costs as moderately lately, with a 2.5% reading reported for Q2. Even with upward revisions in the latest report, this is not a particularly soft run for the unit labor cost data, but it reflects a substantial moderation relative to the 7% pace reported for Q2 2022. So, bada bing, bada boom. I think this is a lower high. I'll go back to this when we have a little bit of time. I will refer back to this and say that I think we do get a lower high. Unless something happens that causes the Fed to cut rates, which is not good, which then would still probably put in a lower high. We would just pick things back up in another, 8 months or so. Start to, at least, right? So that's one. I got another one for you. Delinquencies by type of debt, 2006 to 2023. Delinquencies on auto loans, credit cards, consumer loans are at their highest levels in a decade, experts say. They could rise even higher. I bet they could. I wouldn't doubt that they could, especially with, everyone tightening up the reins. It's not just, because of the Fed. You're going to have companies tightening things up. They're going to want to save money. They're going to, they got to, they've already raised prices. This consumer spending is slowing. It's a fact. And we're going to get right into that because I'm going to show you this chart. This is the good stuff I want to show you guys. So if this is starting to happen, one more, CTA, Goldman Sachs Futures CTA positioning. This is important. This is important right here. Past performance is not indicative of future performances, by the way. Look at this. Look at this positioning. Net short. We're back to where we were as of July. Past it, actually. So now we're expecting it to, look at the COVID lows. This was 2019, so I can't say COVID, but, right? Look how low that was. Negative 30, guys. So, it's coming. They're starting to position themselves for it. If you position yourself for it, it doesn't mean that it's going to come. The chances of it coming are pretty damn high. But at what, is it light? How bad does it get? How bad does it not get? And you got to time it, right? You got to remember the government can still spend money. The Fed's backstopped a few things, which is I'm going to get into right now. So is this a good thing or a bad thing? It's a good thing, but it's a bad thing because they have to do it. So I want to show you guys something right here. Asset liquidity. Liquidity and credit facilities loan bank term funding program. This is the Fed's, pretty much the Fed's balance sheet that they're giving to these banks for SVB. So let's give you guys some education. Let me help you with the definition of this. All right. And then we're going to go into where it ends. Fortunately, it gives me when it ends too, because that could also mean, and it'll be up to the Fed whether they end this or not. But if this keeps rising, that's not good. That means banks need money, and the Fed's got to continue to give these banks money. I feel like, it's good that they did it. They helped stop something. But how long does it continue, and how high can it get? Where does it become a problem where it's like, hey, this is 120 million. 120 million, guys. So, bank term funding program. Again, this is pretty much the backstop of the Fed from what happened at SVB, right? Which is the Fed loaning them money, really taking their bonds, really, in perspective. It's they own bonds, and if the bank runs low on cash for depositors, and depositors want to take out money or be able to take out $20, $80, $80, and they're running low on it, right? They don't have to sell those long-term bonds that they bought. And they would. What the problem is they would sell it for a loss. You probably already know the story. If you don't, that is the gist of it. The banks back up a lot of the stuff a lot of their loans, all their loans, matter of fact, Anytime they give up a loan or get a loan or they get a depositor, they want to back it up, that loan, with an asset, whether it's a treasury bond. There's all types of different tiers for assets, right? So, plain and simple, if they need somewhere to get cash from, they could sell the bond. If they sell these bonds, they're going to be selling them at a loss, and they don't want that. So the Fed's saying, we'll give you the money so that, when that bond comes to maturity, you're not losing it, right? Because we know you have that bond. It's an asset. We'll just pretty much front you the money in return, right? You give us the bond, we'll give you the money, and then we'll swap it back. It's pretty much what's going on. It's like, hey, Johnny owes me $50 here in a week. Instead of me going to get a loan for $50 or asking someone else, it's like, somebody coming in and giving me $50 since I already have $50, since he's good for it, but he's just on a plane from Florida, right? And I have to just wait for him to get here to get my cash, right? So Bank Term Funding Program is an emergency lending program created by the Federal Reserve in March 2023, which we know, to provide emergency liquidity to the U.S. depository institutions, which is established in response to the sudden bank failures of Signature Bank and Silicon Valley Bank, which were the largest such collapses since the 2008 financial crisis. This program was created to support depositors such as American businesses, households, by making additional funding available to eligible institutions to help assure that banks have the ability to meet their needs of their depositors, right? That's all it comes down to, is cash. Liquidity. The BTFP offers loans of up to 1 year in length to U.S. bank savings associations, credit unions, and other eligible depository institutions that pledge U.S. Treasuries, agency debt, mortgage-backed securities, and other qualifying assets as collateral. Like I said, treasury bonds, homes, and anything that is an asset, because you have tier 1 assets, tier 2 assets. You have different categories of assets. All right, so the BTFP is intended as a temporary emergency measure and is set to unwind on March 11th, 2024. And I think that is when things are going to get bad. And I think they may not have to end that. I think they'll have to continue with that. So this is a new program that they created, right? And this is showing you liquidity that is given to the banks, right? If this keeps going up, this is telling you the banks are struggling, right? It is showing you in hindsight, if you look at why this would go up. If you know why this would go up, you know what's going on, which would be either a couple different things, right? Whether people are tapping into savings because they can't afford inflation, right? Banks, like, people start losing jobs. There's some depositors aren't there, right? There's no new money coming in. You have all different types of reasons why this could rise, which would just continue, which would just give you more of the, how should I say this? This is going to give you more of an inclination that banks aren't okay, right? And they just made things harder a couple weeks ago. We talked about that, right? They're raising margin requirements, right? I mean, something's got to give here. Something's got to give. This says here you're going to get it every Wednesday, right? I guess every Wednesday we'll get this. And I would keep an eye on this because this is, it's kind of flatlining up here, right? Where they haven't had to do anything. But when does it start to make that next leg up? Does it make that next leg up? Does it pull back, right? So this is a new program from the Fed, which is showing you right here their liquidity to banks in a trade-off in their assets. So let's talk Bitcoin real quick. Bitcoin cannot catch a bid, guys. I looked at Bitcoin and was curious to know if, with the news over the weekend that the Fed may lower interest rates or may not raise and just pause because of over-tightening, I feel like you're going to get one more try at this and you're putting in lower lows, right? We're putting in lower lows on Bitcoin. I'm sorry to say it. I honestly feel I really thought this would have been news to be able to help send Bitcoin up, and you can see it did pop. That small pop right there was that news over the weekend right here. I'm pretty sure, or it was right there. Yeah, it was right there. This little pop right here was that news that the Fed can pause on the hikes, that they're going to consider pausing, which we already know this. Here's the thing, in a grand scheme of stuff, guys, I want you guys to start really understanding what's going on. I told you guys a while ago. Now, this doesn't mean that it's 100%, right? The first time you go test a support level as strong as this, that supply level is huge. You're not going to break it on the first time. It is going to take news or something happening to break up and out through that 31,000, 30,000 level. You have so many sellers sitting up there along the way. Just because you break through it, people have been sitting on dead money for a while. And when does it become too painful where they're running out of money? It's not back up to where they were at, and they got to sell it for a loss because they need it, because they're out of money because of tightening, inflation, Fed tightening, losing jobs, all this stuff. It's going to have its effect. But I wanted to focus more so on the fact that when we get up to this 30,000 level, 32,000 to 30,000, it's not usually until that fourth time when you really get up, hit it, that you're going to go. It's not going to break it the first time. It's going to take a little bit of time, and it's going to take some more buyers and some more bidding and liquidity to get this thing up through this level, right? I would still consider this double top here the first try at this supply level. Maybe it is 2, right? Maybe we sell off and we get another 2-3 months before, or 4 or 5 months before you get another crack at it. I don't know. If you get that type of time, then yes, I'm going to say on the fourth time, that fourth try up at this 30,000 level, we're going to break it. But I think there's more downside before we get up through there, unfortunately. Right? Unless something can happen quick, right? And the Fed has to cut rates because something happened, right? Which I don't see coming. So that's my thought on Bitcoin. I think we're going lower. Unfortunately, I'm sorry to say it, but I think we're going lower. I think it's going lower. And it's not unfortunate. You want prices to go lower. At least I do, because I want to be able to buy them at decent prices. So that 10 years from now, 15, 20 years from now, I'm like, hey, what's going on? Don't worry, it's on me, baby. Right? You know, you want to get a new boat. You want to be able to look back and thank yourself for what you did 10 years ago, 15 years ago or so. So yes, I want prices to pull back. I want Bitcoin to pull back. I want the S&Ps to pull back. I want everything to pull back. I want it to, so I can be able to buy things at a decent valuation to be able to catch that next leg of upside, right? That next stage, that next generation of growth. So, and the sooner we get all this shit over with, the sooner we can start that. So Bitcoin to me just can't catch a bid, guys. And it's actually, this is a failed breakout. This here is a failed breakout. That's exactly what that is. So if I had to, I'm telling you right now, we're probably going to be back to 22,000 in the next month, 2 months. I'm telling you right now, I think this breaks, and I think we start seeing 21,000, 22,000. Does it happen this month? I think it could. I'm being honest. I think it could. I think we get another bounce, and then we put in, let me look at, yeah, I think we get another bounce, and then we get it. I think we get that bounce, and then we get it. Yes. I think we're going to have, if not this whole week, you could see Bitcoin get a nice bounce back up to 2692. Call it 2,700 or 27,000. We did it Friday, Thursday. Watch the dollar. I think the dollar's gotten to the point where it gives us its pullback. It's already starting to. I think this is where we get our pullback from the dollar. I have not looked at the weekly chart from the dollar. If you guys could, hit that like button, subscribe if you haven't already done so. Just wanted to make sure. Let me see here. Where am I at? So, You know what's crazy, guys? After looking at this, the dollar could go higher. I'm sorry to say it. I hate that I have to say it, but I think the dollar can go higher. With that, I'm not saying that we start from here, right? Because I feel like on the daily chart we're oversold, right? The daily chart we're overbought. So I feel like we get our pullback. I want to see if we can come back and test that 50-day moving average, right? Because what'll happen? What are we going to do? As this pulls back, our 50-day is going to pull up with it. So I think we meet somewhere in here. I'll put a little mark to see if we get there, like we usually do, right? I'm going to say right here, right in that area. That's where I'm going to... No, come on. So I want to see if we can start to... I don't want it right there. It's not letting me do it, guys. It's not letting me. It's either here or there. So don't, and it doesn't have to, but this is where I expect that level for it to come in and bounce. Come on. All right, I'm just going to leave it there, even though I think, oh my God. It's not letting me move it. So, and it's no big deal. We're not here to time things, but that's where I want to see if the dollar can... Oh my gosh. Can I just... Alright, that's it. I'm done. I'm done fucking with it. Because it's going to make me frustrated. So, I want to see the dollar pull in. I want to see the dollar pull into this area. Oh my God. It's still... See, this is why it's not letting me... It's just not letting me do it, guys. It's not letting me put it where I want it. It's either... Like, it's not, I can't explain it with the mouse and stuff. It's not letting me do it. So, I want to see if we can pull in. Give it, what is that, the 20th? See by the end of the month if the dollar's back down here. Right? If not this week, next week. That's what I'll say. If not this week, next week, the dollar pulls back. It actually could start this week, especially if we get decent inflation data. Right? We get decent inflation data. That's where we want to see if that can help pull this dollar down. All right, so 50-day. I want to see the dollar in the 50-day meet right in this 103 area. All right, we're going to watch 2 years, 2s, 10s, and 30s. US 10-year. Pulling it still had a decent update yesterday. So if you didn't notice before all this madness started, right? The markets were going up with yields. Yields were rising. The market was rising. It wasn't until you got to that 4% level and through it, that 4% level, the market was like, oh, hold up. Nope. No, not so fast. That's when you got the divergence. That's when you got the dollar divergence from the S&Ps. So watch the SPY. If you're playing the SPY, watch the dollar. If the dollar's going up, SPY's probably pulling back. It's as easy as that, right? Let's get into the charts, team. Let's do it. I love charts. If you guys have tickers, if you guys have plays, if you guys have ideas, throw them in the chat right now. If you could, hit that like button. Subscribe. Join us. We trade live right here, Monday through Friday, 7:30 to 4. Ivy League Trading. YouTube.com. S&Ps. Let's do it. So what do I think the S&Ps do this week? First thing I want to get into is being able to, if you go back to my watch list from last week, right? If you go back to my watch list last week, I said I think we get a bounce. If you just have to go right back to Sunday's live stream. So why did I say I think we get a bounce? Well, let's go to the weekly chart because I was doing it off of a weekly chart. All right? I was doing it off of a weekly chart. I said I feel like we get a bounce on the daily because we're overbought. Or we get a bounce because we're oversold, right? What did that allow us to do? And it didn't do it so much. I literally said this last Sunday. I said I want to look for us to get a bounce to be able to give this weekly chart, right, another bounce, like a lower high. I'm looking for a lower high on the RSI on the weekly chart. That daily bounce lined right up with it. Lined fucking right up with it. No, I'm just playing. I'm just playing. Just playing. All right. So, why I'm doing that is because I want you guys to start doing this. Look at the weekly chart. Look at the daily. Where are your moving averages? Where's the RSI? Where's your MACD? And where is the volume? You got to look at it. You have to. You got to look at it. I don't need a chart that I just showed you of all-time puts and this and that. Like, I don't need a chart to tell me institutions selling and retail's buying. I don't give a fuck. I know what's going on by looking at the volume. Right? What's going on? So if I draw a line, right? All I got to do is draw a line. Now I went from two charts to another, so I'm going to be a little bit mixed up. Hold up. All right, here we go. So if I draw a line just right here, we're going to cut it in half. Right? What do we got? Well, to me, I got more selling than I do buying in a sense. Buying is they're starting to buy the dip. What comes in here though, right? You got a little bit stepping in. For the most part, I got selling. And where's that selling? Well, all I got to do is pull this down, pull this up. Look here. Where's all the selling? The selling is up here at 445 to 450. I already know, right? You can look at CTA positioning. You can do whatever you want. All you got to do is look at the volume and piece it together with all of your other tools. So, I think Monday is kind of an inside day. Now, what you have to do is, sorry, I know it's a lot because of these lines and stuff, so I do apologize. I really do. You have to see what CPI comes in at. If CPI is decent, that's going to be another reason to break back above this 50-day. Right? The 50-day is this red line. I know you guys can't see it. It's that red line right there. It's that pretty much where that red box is. The blue line and the blue box is the 100-day. I put it there so that on a 3-minute chart, if I'm intraday trading on the 15, 3-minute stuff, I know where the daily 50-day is. And I have a little box there with right where the moving average is. And as it sits there, I know if it's breaking it. If it breaks, retest, boom, and goes, okay, I'm going long. Just I did it with Meta. So that's what I do. I put a mark where the daily moving averages are so I know what it's doing. So I feel like we have an inside day tomorrow. I'm gonna throw out a guess and say that. And where are futures at right now? Let me see where futures are right now because I don't have Bloomberg up. Wow, are you serious? Did we really get a gap up like that? You kidding me? We got a gap up. Why did we get a gap up? What the fuck is going on? Alright, so they bought the dip. I knew it. Fuck. I knew I was gonna go long Friday too at the end of the day, but I don't like buying into the weekends. Wow. Okay, so Bloomberg. That's actually pretty crazy, guys. I did not know we gapped up. I did not know this gap up took place. So I would look at currencies. All right, I'm going to have to look to see what's going on, guys. This is a pretty big gap up in the ES. If this is correct. I'm pretty sure this is correct, right? Am I seeing things right now? We got a huge gap up like this? All right, so I'm going to have to look to see what's going on. I want to say this is probably from the news that they're going to pause rate hikes. That's where this gap up is coming from, if you had to ask me. So we've gapped up above the 50-day. What did I say? I said we're going to have a reason to break above that 50-day. And that's why I thought Bitcoin would rise as well. So let's go look at current. So tomorrow, listen, when markets move like this, you want to know if currencies are not moving and you get a big gap up like we're seeing right now, then the move is not to be taken serious. If currencies haven't moved, if you're getting a big move in the markets, you're going to get a big move in currencies. All right, so I would check the yen, euro, all that fun stuff, okay? I expect this to be off the back of that news, guys. So That's why we're getting this bounce, I would assume. If I'm wrong, maybe you can chime in if you guys have plays this week. All right, so what we're going to look for tomorrow is a pullback on the SPY. Look for a pullback into the 50-day. I'm kind of curious to see where this takes us. And I'll go over a few stocks. I don't have very many on my watch list right now because of I have a watch list, but it's from pretty much from last week. So there is, I guess Morocco had a pretty big earthquake. So yeah, we're only up 0.4%. 0.12. That gap up just looked big for a reason. I don't know why. Yeah, that's so weird. I don't know why we had that big of a gap up. Yeah, see, it's not that big, guys. I don't know what was going on there. All right, so we're pretty much flat, right? We're pretty much where we closed Friday. That's what I thought. I was getting a little like, what's going on? Yeah, so we got a little bounce off of Friday. So I expect the markets to be a bit flat, especially tomorrow, unless we have news. So what am I going to look for tomorrow? Tomorrow I'm going to be looking at small caps. If I'm looking for a day trade, tomorrow I'll look maybe at gold, energy. I'll see what the dollar does, see what the SPY does in case there's something going on that causes markets to move, right? I want liquidity. If I'm expecting, if I'm looking for volatility, then there's got to be a reason. There's something causing the volatility. There's something causing the movement. So what would I look for? I would look for maybe specific news for companies. You have Ford and GM, union talks. Who knows what we wake up with, right? Between Disney, between whatever. Something I don't even know about that could pop up. That's my first thing that I'm going to look at. As far as the S&Ps, I think we have an inside day tomorrow. I feel like we have an inside day tomorrow because of the fact that we have the inflation data and all that stuff coming out Wednesday and Thursday. I think Wednesday and specifically Thursday is going to be the day where we get a ton of volatility and movement. I will be watching to see how positioning goes into the CPI number and PPI number Tuesday. I want to take notice, and you guys could take notice, how does positioning, like how is positioning? Is there a massive buying? Is there selling? Do we have a pullback, or are we getting bought? Or do we do nothing? Right? Are we doing nothing? So chances are we may not do anything, but I feel like if they expect a high inflation data, they're going to try and get this market up a little bit only to sell it back off. So I want to see if CPI comes in higher than expected. Okay, if CPI comes in higher than expected, I'm going to look for a pullback off of, God damn it, I'm so sorry. I don't mean to say God. I do apologize. I'm going to look for a bounce back to 448, 445. I'm going to look for, it's this area, that's what I'm 448, right? 448, 450, right? 448, 450. If we're over the 50-day tomorrow, we don't know where we're going to wake up. If we wake up and we're below the 50-day, then I'm going to look for us to stay under the 50-day and have an inside day, right? We sit here. But if we wake up and we're above because of this talk with the Fed loosening the reins, or not loosening the reins, let me take that back. If this is our last rate hike, I'm going to look for us to possibly get a little bounce up to 450. And if that number comes out a lot higher than expected, then I'm going to look for the markets to pull back, and I'm going to look for us to get back down into the low 440s. Right? I'm going to look for us to get back into the low 440s. You're going to have some support here at 443, 442.75. Right? You're going to have some support because you have kind of a double bottom here, right? So if we look at this daily chart on the S&Ps, let me get a square. If you look here, right, from top to bottom, right there where where that is, that gray chart, you pretty much have resistance, 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 and now what? Support, support. I'm going to look for that to break. If CPI comes in higher than expected, I'm going to look for it to break. But then I want to go into the retail sales number. I want to see if we don't get that big of a sell-off. We sell off, but what does retail sales, PPI, and initial jobless claims, does that add on to the sell-off? Or does it help take it back? That's going to be the question. So if they both data sets come in Wednesday and Thursday, I want to look for us to get back down here to 439, talk about the low 430s in the coming week to 2 weeks. I'm going to look for us to get back down, start coming back down to this 100-day moving average. Right? So far, we rejected the 50-day. Tuesday, if CPI comes out, over higher than expected, look for us to break this level here. Look for us to break this 443. See where we're trading at Tuesday afternoon. And you can expect, if it's higher than expected, then you can expect at least, a 1.5% to maybe a 2% move, right? I would expect a 2% move where we would get back down to 440, 439. Okay? And then, does jobless claims, are they still really good and not loosening up? Retail sales, are they okay, not good? Which I don't think retail sales are going to be good. Do they pack on and add to the over what would be signs of over tightening? And I'm going to look for us to get back down to the low 430s, like 435. I'm going to look for us to get back down here, right? And what would happen, that would cause this 100-day to move up. And I want to see if we can meet that 100-day. And I'll put a box here, right? I'm going to look to see if we can test this area here. We could call it right around this area. I want to see if we get down here if data's bad, right? The low 430s. So I want to see us start trying to test that 435. I'm sorry, 435. Let's see if we test this area down here. If CPI is bad. But along with CPI, if we get better than expected initial jobless claims, not better than expected, but like the labor market's not softening, retail sales are okay, right? And PPI, if it's really high or not high, or no, it is high. It is high. I didn't want to get mixed up. So that's the downside, right? And what would that give us? So let's measure that move. Let me make sure I measure the move first, because you want to know. Let's say if the 50 days here. So just right there is only 2.5%. So what we're going to, here's a lesson. That's 2.5%. So if I go to the weekly chart, so we can look for further downside. We're going to go test that 100-day moving average. So if I go to a weekly chart and we look for what is the average move on a weekly chart. So that's 3.35% there, right? That's 3%, 3.5% there. And we look here, which I have to, sorry. This is, so it's 2.5%, 3%, but from here to there. So we would look for a 3% to a 3.5% move on the weekly candle, right? There's 3% again. So what we can do is we'll take that daily chart, and this is how you guys can start doing this stuff for yourself. If the data's bad, we can at least get a 3 to possibly 4% on the high side, right? If it's really bad. So if we open up at the 50-day, we can expect an end CPI, obviously, or PPI, initial jobless claims, retail sales, and the other data that comes out, packs on to higher inflation, which would mean, with packing on to the Fed continuing to raise rates, we're going to look to at least get back down to the low 430s, All right, now that's going to take a little time. It's just not going to happen overnight. So what are some things I'm going to be looking at? Obviously, tech. That would mean rates are going higher. If rates are going higher, we're going to want to be short tech. Okay, so the low 430s, 435 to, on the worst case scenario, 430. So let's talk about the good side real quick. Same thing. I'm going to look to get up into the, well, maybe not even that gap, but I want to see if we get back up here to 4. I think we try to get back up into this gap. We bounce off the 50-day and just get a 2-3 day continuation to the upside. If inflation data comes in lower than expected, initial jobless claims start to tick up, right? Retail sales are slowing down, right? Like, that's all what the Fed wants to see. That means they can possibly get to the point of cutting rates, right? To the upside, I want to get up to that gap at like 450, 453. That's my downside. Low 430s, high 440s for the upside, right? Very easy, right? You have your 100-day moving average here. We get up that 50-day, but if we do get decent data, I want to look to see if we bounce, depending on how good it is, because if that data is really good, we're going to bounce and then go. Let me hurry up so I'm not talking all night and everything. I don't know how long this recording has been. We've been on here for an hour, guys. All right, so watch Meta. Meta had some really weird price action, guys. Look at the past couple of days in price action. So right there is the 50-day moving average, right? This was Thursday, and I completely missed it, right? Look at that bounce, and then it took it right back. It took it right back. So I want to know what's going on with Meta. Meta's got some fishy things going on with it. I could always look at the weekly, daily, and do my own due diligence and see. The thing is, guys, for the past week and a half, what have we've been sitting. Your 50-day has literally been right there. The top of that line where that turquoise line and these here, that 50-day has pretty much just been curling like that. Right up on, it's been resistance, right? That 100 days resistance, 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 resistance. Well, you broke up and immediately sold it off. What did we do here on Thursday? We got, and I said Thursday morning, long Meta if we break above the 50-day. That would have been a nice trade. But look what, and I literally said, I can go back to the live stream and I can show you guys. I literally said 307 on Thursday was the upside target. And it literally went to 306. It went to 306. It says 307.3 there, but it was like 306.90 something. It was like, if that is true there. Yeah, 307.03. My target was 307. I can show you guys how to do that stuff. Which, again, all you got to do, right, if you don't believe me, that I said it before it did it, right, you just go to YouTube, and then you would go to Ivy League Trading, and then what you would first do is hit that like button and subscribe if you haven't already done so, and then you click here, and then you go to live, and then you just go right back to Thursday, 2 days ago. Right? 3 days ago. Right there. Right there was the day that I said, hey, Meta, we want to look for 307. Meta, right here. I said 307. I'm sure it's coming up. It's probably coming up very quickly. It's going to take its time. So I literally said Meta 307. That's all you got to do. And I guarantee you it's coming up right in that 20-30 minute mark. Right there. That's where he said it. That's exactly where he said it. I just found it. So just go. It's in that 20-minute mark, guys, where I said Meta 306, 307. I don't have my earplugs in right now. I'm telling you right now, this was Thursday. I said it. Swear on everything I love and know. We might get a bounce. Whoa, 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 whoa. Whoa, whoa, whoa. I know this is live, so I don't want to continue to do this. All right, so just go back there, last night and you can check it out for yourself that I said 307. All right, so that was the S&P's Meta. Meta went up here Thursday and literally just rejected. I didn't see any news. I mean, look at this. You're talking 307 down to 292, guys. That's a $20 move. That's huge. You understand that is a crazy trade, right? And I don't think this was talked about. So if we go to the daily, every time it tries to break above the 50-day, it gets rejected. And I have not been shorting it because I'm seeing what it's doing. It breaks up above, and then it rejects, and it rejects hard. But then it gets bought back up again. So my whole thing with this was that it's where it wants to be, it needs to be, and that we sit in this range and wait for the news to break up to the next target or down to the next target. Well, range, right? The next range or the next low range. So where we are now would be like 280, 290 to 320, 315, right? That would be the range. The range we're putting in right now. 270 or 275 to 325, right? In that range. And then it would eventually have to have some type of news or earnings or a catalyst or something or time for it to start making, 320 support and then turning, and then going up to like 360, right? 370, 380, whatever you want to call it, for it to start trading up into this range. So Meta is on my watch because it has been doing some really weird price action. If you've been trading with us, you know this because we've been watching it. All right, so this, right? This let me auto zoom this because I wanna look at this. Like the volume has dried up on it a little bit, but I want to see if we can kind of get a bounce because like I feel like it's just overdone. I feel like Meta is overdone, and it needs a pullback. It does. It needs a longer term pullback on that weekly chart. So, maybe we get a small bounce this week on Meta. Let's see if the daily's oversold. It's a little oversold. It's not oversold. It's just right where it should be. Nice, healthy stock. Let's see if we can get a bounce and then officially make 305, if not 310, resistance. But I don't see us getting that 305 to 307 area, guys. There is just a brick wall of sellers. And that's, you also have your gap fill up here. Well, it already filled its gap by selling off into it. But, we have a double bottom here. And I feel like just as soon as it gets above that 50-day, it gets rejected. Look how many times. 1, 2, 3, 4, 5, 6, 7. 7 times. So I haven't done this, but I am kind of curious to know what the Fibonacci retracement is on this move here. I could go from close to see. Okay, so that's not taking me to the double bottom. These are the things you got to do, right? These are the things you got to do. This is the work that's got to be done. So I'm going to be looking at Meta. I'm going to be looking at Tesla. And whatever, specifically Monday, I'll probably look at small caps. All right, so that was... So it's almost... I feel like... It's almost to that double bottom. What's funny is you still have a gap on Meta, guys. Do you see it? It's right there below that 38.2 fib. It's a 50% retracement right here. You have a gap here, right at the 30, right at that 58% retracement. So it's going to get filled. It's just a matter of time, right? It's just what is it? Is it earnings? Is it recession? Is it what is it? You have a gap down here. Of course, it's already put in that price action years ago, and it pretty much sold off. Turns out they shouldn't have sold off, and it's just back to where the valuation that it should be. It was just a round trip, pretty much. Which, if you didn't buy Meta, shame on you. You got when a company is this big and you don't take advantage. I don't care how bad the news is. The company ain't going nowhere. They still had a ton of cash on hand. Like, it's a mega cap tech company that it's going to take a lot for this thing to be nothing, right? So we'll look into some of the stuff that you guys have. So I'm going to be watching metal. I'm going to be watching tech. Mainly, I'm going to be watching the S&Ps for this data. And then I'm going to look to see what stocks are weak, what is strong, right? So we've had, this is AMD, but like, look at Roku, right? Roku and innovative stocks, which is ARK. So they had a nice bounce last week, a couple weeks ago. You know, does it start to try to hold this as support? I doubt it, because it broke it and now it's turning it into resistance. Like tomorrow we could look at Roku. We could look at Roku for the short to see if we can short Roku again. We were actually on this trade, guys, Wednesday. Wednesday we were long it, but then I wanted to get short and wasn't sure if it was going to give it to me. So it was a little tricky. Right? Literally up here. No, it was that bounce back. Right here is where we got long and then sold it, because I felt like the news was going to get sold. I felt like that was a reason to sell and take profits, and that's exactly what happened. So we do this. If you guys come join us on the desk, when you get news like this, you know, I was watching another station. They were talking about buying it and going long. I'm like, no. Don't listen to that, guys. This is an opportunity for a sell-off. Like, dude, I don't expect it to go higher. They cut 10% of their workforce. That's good. They're saving money. But that's not, you know, you start getting into a level as when it gets up there, it's like, hey, you're just giving these people opportunity to sell this thing for a decent profit, or they've been in it for a while and they're just taking profits at a loss, right? It's a nice little double top for the most part as well. If I go back, right? See, there's a small double top there now. It's just a lower high. So that news came out. I said, I'm selling it. I started because I was a little like iffy. I wasn't iffy at all. My thought process, my conviction in the trade was correct. It just didn't do it in the manner that I thought it would do it. I expected to take back majority of that move, like not take all day. It was just acting so weird in the morning that I was like, you know, it made me think. So this is all learning, right? Every day is a new day in the market, and time in the market is the best thing for you. You can be in this thing, you can be in the markets for 10, 20 years and things change, and you're still going to have days like that. I've been doing this for close to 10 years, almost 10 years now. And I still have days like this, right? But I say, you can go again. We can go back to the live stream. If you could hit that like button, subscribe, and hit the like button for me, guys. I'm trying to get to 500 likes. I'm trying to get to 500 subscribers. I'm sorry, and like 1,000 likes, like, you know, overall. I'm begging you, please hit that like button, subscribe, please. So, and come join us. Come join us on this. We go through the news. We don't charge you guys. We don't sit you guys through all kinds of sales pitches. Guys, you guys know when you go to these places, you pay them money and then you still get upsold everything. Like, you don't get their trade ideas before getting hey, we have spots for this and this and this. And they don't care. They come on the last couple minutes, like, you got 10 minutes before the market opens, and then they want to give you their trading plan. Instead of giving you your trading plan well in advance of giving you the list of stocks so you can come up with a game plan, I give you all of the things I'm looking at bright and early. And I don't sit you through sales pitches. I do have stuff that I'm working on that I need to bring some revenue in to help this channel, right? But I'm not going to sit here and bore you guys to death and treat you guys like you guys are, you know, I'm not even going to say it because it's ignorant. It's ignorant. And yet you can say you're a business, you can say this, you can say that. Well, guess what? That's fine. Conduct yourself in that manner and see the results that you get. Fine, that's cool. They took everybody's COVID money, right? But it put a bad taste in their mouth. Maybe we can help not put a bad taste in their mouth. Because these are the same people that said, I hate this industry. I hate this industry. No, motherfucker. You are the industry. You are the industry. And I hope one of them's watching right now. No, you are the industry. So don't let them put on that front. Because I'm telling you right now, they're gonna take advantage. They're gonna just try. Their job is to continuously get sales. That is the model that they live on, right? Upsell, 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 upsell. Get them in the door, then we'll worry about getting more money later. Guys, just hit the like button, subscribe, so that I can possibly bring in a sponsor and do this, so you guys can have a place to trade and not like, I love TraderTV.com, Trader TV Live. I bless them to death. I love those guys, but some of the stocks that they do is like low liquidity. They don't give you they don't give you how it should be. It's like, hey guys, when we get here, I'm going to be selling. When we get down here, I'm going to be buying. Like, this is my plan for this. And it's kind of like going about, hey, all right, I'm in, I'm out, I'm in, I'm out, right? Kind of scalping. So no, that's not what I want to do here, right? And I want to help have a place that you guys can go to if you don't have much money, that you can go to and get the news and get trade ideas and get the help you guys need. If you want one-on-one, guys, I've been doing this for close to 10 years. I'm going to tell you right now, I'm very good at it. I'm very good at what I do. I'm probably going to be shorting Roku again. Probably this week. Roku will be more than likely be shorted this week. All right? So be there with us. Hit that like button. Subscribe if you haven't already done so. If you want some one-on-one help, my email is in the description. All right? So, Roku, Meta, obviously. Tesla will be another one. This is a triple top at a 50. Another rejection of the 50-day. Do you notice how you're getting this in many stocks? I actually just deleted it. And I didn't mean to. I had a list of the S&P 500 stocks that were above and below the 50-day. And shame on me for deleting it. I think it's getting ready to storm, so I'm going to have to wrap this up because I hear it. Yeah, I hear the wind. The rain is going crazy right now. So forgive me, guys. Please join us on the desk tomorrow right here, ivyleaguetradingyoutube.com. I gave you my plan on the SPY. If CPI is good, the data Thursday with PPI, initial jobless claims, and retail sales, all that stuff is good and aiming that the Fed can slow down. We're going to look to get to that 350 area. If it's bad, CPI is bad, the Fed's going. It's just a sign that the Fed's going to have to possibly do more, or it's taking longer than thought. Then we're going to look to get to 435, 430s. Those are your levels. Just come join us on the desk. We'll go right through the levels. We'll go through daily news between small caps, mid caps, large caps. We trade them all, right? We trade all of them. We'll see what news we have for the day to possibly do some day trades. So thank you guys for joining us. If you guys have questions, throw them in the chat. If you have any tickers you guys want to go over, go ahead and throw them in the chat now, because if not, I'm going to go. And I'll see you guys in the morning. I'm going to give it I'll give it a minute or two. And there was some, I probably will be looking at Bob. I have to go look over stuff again. I've been really been watching college ball and, doing a lot of work. Not just watching, but doing some work for a newsletter that I want to get out. Bob just got to bounce off its 100-day. I want to see if there might be a China trade here coming up. All right, I want to see if there's something to be able to, whether it's a swing trade, whatever. I'm just letting you guys know I'm having I have it on my radar. JD. So let's see here. All right, if you guys don't have any questions, that's fine. That's cool. Let's real quick XLE. I know I said I was going, but watch energy. I'm really curious to see if energy gets a pullback. All right, I want to see if energy can get a pullback here. I feel like it might be a bit overdone, but we've been on this thing since day one, guys. We really have. We were on it down here at this double bottom. All right, members in chat can attest to that. I haven't seen my boy Collins tonight. I hope my boy Collins is all right. Hope he's all good. I haven't seen him. NWGL is the Chinese IPO I was talking about. Okay. I'm going to write that in my book. You said NGWL. NWGL. Let me do this real quick. I did write it down. Okay, I appreciate that, NASCAR. If you want, NASCAR. I'll probably be on. I'll be on early tomorrow. Okay, closes tomorrow. debut Tuesday. Okay, cool, cool. I'll probably I'll be on tomorrow, actually a little bit earlier than normal, to go through small caps. I might even be looking to get into some small caps early at like 7:30. I may start to try and catch it because if we don't have a reason to move Monday and Tuesday, small caps are going to continue, and you know that. I know you know. So I will be on tomorrow morning pretty early. XLE goes up and dollar goes up. Not necessarily they go up together, but if the dollar continues going up, guys, look for that that pullback in gold. Right? Look for that sell off in gold. So there's the rejection now, guys. I think now if gold is going to sell off, you just got the rejection of the 50-day. I'm telling you right now, it might be the time right now to short gold. I'm saying it right now. Saying it right now. If you do not take the time to short gold right now, this upcoming week, if it's going to happen, it's going to be happening very soon this week. If it's going to happen, it's going to happen this week. And this thing's probably going to sell off for a good bit. And, you know, I feel like this is the best risk to reward to get in that. Shit. Hold on, buddy. I know you said something. Let me just get this up. You know, and we got it, like GLD has a gap fill all the way down here at 160. That's a $19 move. That's pretty big on GLD. Man, it's storming its ass off here. My best. Yeah, Friday was a little rough. It was a little weird. BIOC had an 8 p.m. Damn, dude. Oh, that's sweet, bro. That's pretty much, what is that? 78% gain, right? 80, damn near 75, 80% gain there. That's awesome. That's nice, bro. That's really nice. So that's why I say, like you said, 8 o'clock. I'm going to be looking to come on here early. I might even come on at 6:30, right? I might even come on at 6:30 in the morning. Because I'm ready for this week. Last week, I was it's like not that I was wore out, but like last week I needed a break. I needed a break from the markets. I needed a break from everything I was doing so I can recoup and give you guys this type of shit, right? Because, you know, I'm telling you guys, we can make some money together, right? You don't need to get ripped off. It's like, whatever. You guys go join groups. That's fine. It's not even about joining groups or not, but I just feel like there's time that I've had in the market. Like, I just feel like personally, we've been calling some damn good things in here. We've been on it. And I'm telling you right now, gold's one of them. If the dollar is going to climb higher, you know, maybe you get another bounce back if the dollar pulls back. But I feel like gold, if it's going to sell off, it's coming. Oh, I wanted to look at TLT. Cons, there's my trigger. How you doing, bro? I know. I'm ready too, dude. That's right. You were on vacation. I remember. But I hope you guys had a great weekend, man. I appreciate you guys coming out. That's what's up, man. Let's look at, guys, keep a watch on TLT. If the Fed starts talking about pausing, that doesn't mean it's going to shoot up. But if we start getting data, if that data is good, this is another sector I'm going to look at. If CPI still comes down, everybody expects it to go higher, and it comes down, TLT should rise. TLT should get a really nice bounce. And it's at an area where it bounced, pulled back off of that support, and it's looking like we could get another rally up, guys. If you missed it the first time, and I said it down here, I said, guys, I said short, or did I say long? No, buy TLT. I said it was on a Sunday. It was on a Sunday. I said it Sunday. I said it Monday night, or Sunday night, Monday morning, Monday night, and then Tuesday and Wednesday, you got this. Boom, boom. Right? You just got this big rally out of TLT. So, I'm going to be watching TLT, and I think we just got the second opportunity, just like GLD, gold. If you ain't shorting gold right now, and it starts to go, you might as well just forget about it. Because, I mean, you can still do it, but your risk to reward is going to be skewed at that point, especially if it gets going. So watch gold, watch TLT, and I got to write it down for myself so I do not forget, because I'm really good at that. I'm really good at forgetting. Coincided obviously with the dollar and the data. I don't know if you guys can hear the rain. It's fucking ripping. That's what I'm watching, guys. I think we might have an opportunity if TLT, especially if TLT pulls back to 94, I'm going to look to buy it. I feel like we're going to start seeing some buyers start to step up here and make somewhat of a double bottom. All right, that's about all I have. We'll see what we wake up to in the morning. I'm going to make another cup of coffee. I'm going to go through a couple charts tonight, look at some news, and hang out and watch the game. So I appreciate you guys joining us, guys. Hit that like button, subscribe if you haven't already done so. It helps us out a lot. That's all we're asking is a like and a subscribe, because I'd like to be able to bring on a company or something on here so we can continue to do this for free and not charge anyone. I don't want to go that route. I'm trying to avoid that whole mess, right? This is me not being the industry, other than the people that say they hate the industry but are the industry. Fuck that, all right? Come here, get an education. And don't motherfuckers tell you, people tell you, you can't trade small caps, you can't do this, you can't do that. Nah, you can. You can do whatever you want. We trade options every day, and we lose, right? We come on here and have red days, but our red days are about break even and very small. You just not have to know what you're doing. And I'm still, I know, I'm still working on. So I have a delta, I have an options video that I want to get out so you guys can start knowing, how much, roughly have an idea in accordance to how it moves, your risk, and how much you're going to make and how much you're going to lose depending on what happens. So before getting in the option, you can kind of tell how much you're going to make and how much you're going to lose. So I'm going to make that a focus. Matter of fact, I'm going to write it down. If you guys want it, I'm going to put it out here, and it's probably going to be the only YouTube video that actually will show you and be in depth, where you can take it and be able to use it and say, hey, it took me a couple days, but after watching it and really getting it, I get the idea. I know options, and now you can be able to, to get to that point where you're like, hey, I'm probably going to lose about, if it goes from here to here before 10:30, I'll probably lose $80, or I'm going to make $80, right? So, it's good to know. You can use it to manage your risk, where you're not buying a bunch of options and then getting hurt. So, but that's it. That's all. See you guys in the morning, bright and early. Hit that like button. I urge you, like and subscribe. I'll see you guys early in the morning. Let's get it, guys.